Good evening, and now back to the budget. One point where we are going to focus on over the next 30 minutes is going to be taxes. Taxes, income taxes, and how they matter, or this new slab or this new regime that has been created. How is this going to impact you? For instance, should you go for this new option or not? So first of all, what has happened? Now there is an old system which includes certain perks and benefits, exemptions, but then the old slabs remain. But the government feels that for all those who want to avail the new regime or the new system can do so, they can make a choice. This will mean less paperwork, it will be less cumbersome, and there will be a benefit. The tax percentage is less, but, and that is a big rider, you will have to give away all the perks and exemptions that you get. So is it good or is it bad? Let me quickly ask the experts right here. I have Gokul Chaudhary, partner of Deloitte India, with me. Nitin Desai, chairman of the Institute of Economic Growth and also the chief economic advisor in the Ministry of Finance. I also have Amitabh Dubey, he's a political analyst with me. Thank you so much, all of you all.
Former, very former, 30 years.
Yeah, former, very former. So first, let me begin with you first. Sir, what do you think about this announcement? Right, because the criticism is, the political criticism is that this means this is a bit of nothing. So you have reduced the tax rates, but you've also taken away exemptions.
Let me say that, but they're still going to give some some money away, because Absolutely. She announced that a certain amount of money will be given. I think the drive towards eliminating the deductions and exemptions is not bad at all. This is something that economists have been arguing for a long time. And I would say that this is probably one of the features of the budget which somebody like me, who otherwise thinks the budget is a very disappointing one, would welcome. So
you would welcome
now
this.
I would welcome this in the sense that it's always a good idea. I hope that it moves this process of removing exemptions and
no, so Desai, you know why I also agree with you, because there are a lot of people in this country who would say, damn with that paperwork. I'm sick of all these files and papers and exemption. It's just convenient.
Yeah, the only one thing that I will say is this, that the people who will benefit are essentially the lower income people, below 15 lakhs.
Yeah.
People who
are
already,
population.
People who are already, no, but they're not necessarily the biggest taxpayers. That's not where the tax comes from. I'm absolutely certain that anybody who is in the 20% plus bracket is going to continue using
the exemption. It makes more political sense. For instance, if you're not being able to get a lot of tax from that section, and that's a large population, you have given an option to make their life easier. For instance, now this is easy computing of the tax process.
That's certainly, and I'm sure that he'll have a much clearer idea on what the actual gain to people is. Yeah. But as a general principle, simplifying the exemption deduction system is not a bad idea.
Okay. Gokul, I want to ask you, and Amitabh, I would want to ask you the political side of this also, apart from the economic. But Gokul, let's begin with you answering a question on what is the international experiment or the international norm as far as personal tax is concerned?
So if I look at personal taxes globally, and if you go to the OECD sort of countries, what emerges is it is the single largest component in the collection, and followed by the VAT and then corporate tax. In India, personal income tax is the smallest piece which sort of sits here. I think one interesting observation that comes out is when we look at the tax growth that the finance minister is speaking about in the budget documents, personal income tax is expected to grow at 14%. As opposed to corporate tax, which is going to be growing at 11.5%. So really, while there is a giveaway, but in holistic terms, the growth in personal income tax is expected to be higher, which is sort of trying to build up towards the fact that personal income taxes have to be larger base than what it is currently. I think, but you know, if you look at the larger play that is happening here, it is as follows. When it came to corporate taxes, the government came up with a roadmap in 2015 and said, look, we're going to take away the incentives and we're going to lower your rates. And they took close to 5 years to reach that point, which it did last November. When we look at personal taxes, they've started the journey now to try and say, look, we're going to start reducing the rates, start giving away the exemptions. And the exemptions are quite a lot in the tax code. We really cluttered up our tax code with those things.
Correct.
So if you look at the balance of it, I think it's in the years ahead, it's a great initiative. There will be some amount, in some brackets where the tax will be slightly more or some slightly less. But look, I think if you look at the type of investment the government is making in tax technologies, the government will be able to actually generate a tax return for an individual on its own portal and send it to a taxpayer and say, can you confirm this? And that can only happen if the taxpayers have given away the incentives. Because if they have not given away the incentive and deductions, the system cannot pick up as to what the tax outcome will be.
It's a sort of a give it up scheme, if
It
you
is.
were. No, but then, you know, I was trying to ask you about the international experiments. Usually, the sound of income tax return filing and general taxation or computing of tax becoming simpler or easier will be good news.
It is good news, and the second is adoption of technology. So both simplification and adoption of technology is something which is an international best practice.
Okay.
So this enables the move in both their directions.
Okay. Now, Amitabh, there was a reason why these exemptions existed in the first place, right? We are not an international country. We are not. We cannot just blindly follow the international norms. First of all, if you could tell us a little as to why these exemptions existed, what was the benefit that was envisioned, and why is there a reason why the government has kept both these options?
See, I think...
and will this not create further confusion?
Yeah. So there is two things. One is that at the moment, maybe it's transitional, but we now have two sets of rates. So there will be more complexity while this transition is going on, and I think some taxpayers will be confused, they'll need professional help and so on and so forth. But the other thing is that, you know, in theory, certainly having fewer exemptions is not a bad idea. But there is one exception in my view to that, which is that people tend not to save unless they are nudged into it. And Section 80C and similar sections are one way of doing that, particularly young people, right? It's quite clearly established that young people don't save. But if they do start saving even small amounts, it compounds over their careers into very substantial sums. So even if they're saving a few thousand a month, by the time they hit their 50s and 60s, it can be a very large amount. So I think sections like 80C and its variants do have an important role. So I think it would be a mistake to throw the baby out with the bathwater. Perhaps you can have few exemptions, but there should be a nudge for young people to invest their savings somewhere.
Very interesting. Basically, you're saying the government was trying to play the wise elderly in the household that get into the habit of savings, which people who otherwise not do.
Yes.
There are somebody who designed some of these things also.
Sure.
He is absolutely right that in an Indian context, if you remove 80cc altogether, you will definitely hurt small savings. There's no doubt at all. And LIC also will be hurt. Because LIC is not a very good investment. Let me be very frank.
That's true.
And if you didn't have that 80cc, it would not be worthwhile at all. Because the return that you get on an LIC, with the terms they offer are terrible. Terrible terms.
Correct.
And if you didn't have that tax set off, you wouldn't put it there. LIC will be hurt. So I'd say that there was a reason behind this. It wasn't that it was partly a way of allowing the financial entities like LIC to basically operate on a basis which was quite profitable for them because they could offer weak terms because the government was bearing part of the cost. Now, if you really want this to work, you'll have to put pressure on them to say, now you better go and work to make your terms better so that you make up for the loss of the 80cc benefit. That's not going to happen that quickly. So there will be, I think the confusion over the next year or two, maybe a little bit more than.
Let's introduce two more guests. Madan Sabnavis is the chief economist at CARE Ratings, and Jayati Ghosh, professor of economics in JNU, is also with us. Thank you so much. Professor Ghosh, let me begin with you. How do you look at this, the fact that now you have two different systems, two systems of computing your tax? See, the vision behind introducing a new system, according to Nirmala Sitharaman, was so that you can do away with this devil every year called the chartered accountant. Because it is so complicated, you would go for a chartered accountant, give him all your papers and tell him, just do it for me. So her vision and her idea is that now you can do it yourself. Is it actually going to work that way?
Don't
No,
you
I
want
don't
that?
think it's been a very complex system, and I think I was following your discussion.
Madan,
where
just
we
one
say
moment.
every
That was for
exemption has
Professor
a certain
Jayati Ghosh.
motivation.
Madan, I'll come to you. That question was for Professor Ghosh.
Okay, sorry.
Yeah, Professor Jayati Ghosh. Sorry, apologies.
Yes, I'm saying at the moment it's not really very simple. It's a very complicated system. There are many slabs. Every individual will have to work out her or his best interest in terms of whether they're better off with the exemptions or without. This may change over the next year. I don't see this immediately as making much difference in terms of simplifying. In fact, I think it's a bit like every time the government says they're simplifying, like the good and simple tax, remember, it ends up complicating life further.
Okay. Madan Sabnavis, would you like to weigh in? I mean, do you think that this is a welcome step? See, a lot of experts I spoke to, people in the government also I spoke to, many ministers, of course, it's their budget, so they will say it's good. But many ministers felt that you would not immediately understand the importance of this change. But this change is absolutely significant. How do you look at it?
No, the change is significant, and I think what's been good about it is that people have been given the prerogative to choose any of these two regimes. And I didn't find anything really complex in terms of computing a tax, because I think the exemptions are fairly much fixed. You know what exactly where exactly you want to save. And as I was saying earlier, that there has been a motivation for everything, and I think ideally the exemptions should always remain, because India does not have any social security system, and the Section 80C which we are talking of, or the additional money which one gets as a set-off in case you go in for pensions. I think the whole idea of keeping this and introducing these sections was to make sure that you're able to provide for the rainy day. At the time of retirement, you do have a corpus of funds, because we don't have any other alternative system. So today, actually, for a person, or rather in case we shift to the new regime, there will be less incentive for a person to save in these instruments, and I think that will create a problem at a later stage. But I think as of now it's fairly neutral, because if I have the choice of retaining the old system, I can still carry on with it, in which case one can turn around and say that the budget has actually done nothing much for a person who's going with the old regime. And even for the new regime, I think our own calculations show that if you're at the lower end of the income, you would tend to benefit. But if you're, say, in the 20 or the 30% bracket, there will not really be any significant gains for you. In fact, one may actually lose out in case you're in the 30% bracket. So this could be anti-consumption. It could go as against savings also.
I think
so I'm not quite sure if it's been
philosophy
a very good thing from the point of view of consumption or savings.
Yeah, Mr. Desai, I'll just come to you. Let me introduce Mr. Ravindra Kishore Sinha, also is a Rajya Sabha MP of the Bharatiya Janata Party. Mr. Sinha, the philosophy of the government, it seems, is to put more money in the hands of the consumer. That do whatever you can. I mean, this is what I was told by a lot of MPs. The idea is to push money back into the system so that people start spending. But you know, the larger concern over here is, especially at a time of an economic slowdown, people would look for the first opportunity to save. It's a very human instinct that you would, in times like these, try to save more rather than invest. And for the economy to move, you need to start that cycle. So how will you kickstart that cycle of investment and reinvestment? Mr. Sinha.
Actually, there have been so many measures taken in this budget which really encourage middle class and the farmers to do such things which will create massive employment. So I see this budget as a very big employment generating opportunity, because a lot of spend on the infrastructure, irrigation, agriculture and such related projects have been announced. So I think that it will definitely generate a very big employment opportunity to semi-skilled or unskilled people who are not normally in the agenda of many of the policy makers. But this budget has certainly done things which are going to generate massive employment, And as regards spend, which was your question, if the confidence of the people will be there that their money is safe and the tax slabs are lower, they have more funds in the hands.
Mr. Sinha, the tax slabs are
then
not
definitely
lower.
they will try to.
See, technically, Mr. Sinha, tax slabs are not lower. For instance, under the old regime or the old system of computing personal tax, income tax, it remains exactly the same, word for word. You've just introduced a new system, which is also, many experts feel, going to benefit only a small section. It's not really going to add more in terms of revenue for the government.
I beg to differ, sir. It is not like that. Suppose if a person who is getting some exemption on the EMI of a house, he may opt to remain in the old plan. But I want to ask a question that what is the percentage of that class which own their own flats? Mostly they are in rented accommodation. So for them the new scheme is better. And option is there.
Okay. Professor Ghosh wants to weigh in. Yes, Professor Ghosh.
Yeah. So just 2 points. First, remember that direct income tax payees are only 2% of the population, if that. And a majority of those are probably not going to actually opt for the new system. In any case, it's not very clear which of this will actually generate fresh tax revenues. Currently, the government estimates they will lose tax revenues because of this. So that's the first point. But the second is, and in any case, this is, if you like, a broader transition to a system of lower rates without exemptions. That's a small tinkering over a longer term process. It's not something that is designed to deal with the demand recession we have right now. Where I'm really concerned is this budget does nothing for that demand recession. It's not actually putting any money into employment intensive sectors. It's cutting the outlay for NREGA at a time where you should be doubling it or tripling it. It's reducing the spending on agriculture. It's doing a whole range of things which actually are going to reduce the incomes for mass consumption demand, which is basically what this economy is crying out for right now.
Okay,
so
Mr.
I
Sinha,
think it's really done the opposite of what was required.
Mr. Sinha, you heard what Professor Ghosh has to say. Would you like to respond?
Yes, I heard her and I respect her views for her knowledge, but I keep on moving the whole country and mostly villages. So I can tell her and to the audience that it's not like that. You say that employment generating things, if you only consider as industry, then you are mistaken. We have huge employment generation capability in tourism, which has been addressed probably for the first time. And if we can sell India as a tourist destination, I am...
No, Mr. Sinha, I think what Professor Ghosh was talking about was outlays for Manrega and not particularly about tourism. She was talking about spending of the government on social welfare schemes.
Actually, let me tell you, it is my personal view that Manrega is not a kind of employment. It is not at all. So the people should get a proper, respectable opportunity of job which can sustain for 365 days, not only 100 days. So Manrega, whatever is the plan coming on and going on.
I mean, you will start a whole new debate. I'm going to reserve that for later, because you're going to start a whole new debate on whether Manrega is required for this country or not, given the fact that this government has spent more on Manrega than even the UPA.
Currently it's okay. Currently it's okay.
Yeah.
But later on, when we are going to give a proper respectable employment to everybody to work, then probably we have to consider that such schemes which unnecessarily go to the ground and
I completely agree. I completely agree that Manrega should not be necessary. But unfortunately it is.
Yeah, in an ideal world,
ideally we should not need Manrega. Ideally the economy should create jobs.
Can I just say
we must have, in fact, that floor.
Can I just say quickly on the one more point on the proposal? There will be a lot of inertia. If I've got an LIC policy, I'm not suddenly going to give it up because I want to be in the new system. I'll remain in the old system. So a lot depends on what are the 70 they have removed. I haven't seen the list because there will be some which will still remain. Second, what Jayati is saying, that why I describe the budget as disappointing is I don't see any demand, short-term demand stimulus in the budget.
Would you have a clue on what all has been exempt in the new list?
Well, a fair bit of stuff has been taken but including there's an impact on the Provident Fund related deductions which is there. But I think if you just go back and look at the corporate tax scheme that was brought in, because it has now been in play for a few months and therefore the details are known. When we go back to corporate taxpayers who may be more sophisticated, but a third of them want to stay with the existing corporate tax system, while a third of them are migrating. So, you know, it is a mixed bag, and even if you were to look at personal taxes, there will be a variation as to how different groups of taxpayers really respond to this. That's one. B, I think there is a shift to try and make the tax system less intrusive and less in the lives of citizens, individual citizens. If we see the tax refunds which were due to citizens has improved in the last couple of years. By having this shift into a technology-based regime will actually make the interaction not only with the taxpayer but also with the tax department or rather with the tax intermediaries less. It can potentially make the interaction with the tax department also less, because a lot of the stuff really comes in the audit is what deduction do you take, did you have the right basis to take the deduction, the audits and all that stuff. The minute you can sort of reduce that level of interaction, the better it is for the citizenry. So I think there is some amount of advantage that this system will throw up as it matures.
Okay. Mr. Amitabh Dubey, see, let's quickly go back to this new regime, and since Mr. Desai was talking about the exemptions that have been removed, so I've been able to get access to what all has been removed. So LTA goes, or leave travel concession, house rent allowance, some allowance in clause 14 of section 10, allowances to MPs and MLAs as contained in clause 17, allowance for income of minor as contained in clause 32, exemption for SEZ, and this list goes on. As far as the sections are concerned, any deduction under 80C, 80CCC, 80CCD, 80D, 80DD, and this list goes on and on. Essentially, all exemptions of any kind.
80C and 80DD is all removed.
Absolutely, yes. All of that has been removed.
Then they're not going to get much. Many people.
Then this is going to cause a problem, as people who are young and predominantly people in the new regime will be the younger, lower income people. They will not be nudged into saving enough as they age and as they progress, and this will cause, this potentially going to cause a savings problem down the road.
Correct.
So I would suggest that the government revisit this particular part.
So I'll tell you what all, I mean, as I'm reading, this is fascinating. Daily allowance to meet ordinary daily charges, any allowance granted to meet cost of travel, conveyance allowance, transport allowance, 80 AA, 80 CCD, 80 IBA, 80 IB. I mean, this list is really long, which essentially means that all exemptions under the clause 80.
Under section 80, basically. They're removing, essentially, I think this is not going to work because and what will the medical insurance people, the life insurance people, small savings will be hit hard because they are dependent on people getting these particular incentives in order to run their business. Second, the longer term consequences if it reduces the incentive to save.
Okay.
And it will reduce the incentive to save unless those people improve their terms.
So I think here coming in, India needs different and new progressive systems for saving for the new millennials. We don't have that.
Okay.
What is happening is that the old system of employment for life is no longer there.
Okay.
A lot of people are in the contracting industry, a lot of people are in the gig economy, a lot of millennials will change their jobs, they'll work for a company, then they'll be self-employed, and then they will do something else.
Correct.
So the old pattern of saving and investment is no longer in place.
Okay.
What we really need is new saving schemes to come in to be able to incentivize them to come in there. And I think the EET basis, exempt taxes basis of those schemes is what we really need to build and deliver. So I think the scheme which has been proposed now needs to get supplemented with new investment schemes to be brought in.
Okay. I'll have to end this discussion right here.